Hello, everyone. As November comes to a close, I'd like to take the time to introduce you to my $7,000 portfolio I was able to build at age 17 and just give you insight on the philosophy I built and created as a young investor. So, this is my Savvy Trader portfolio. I've had this portfolio for about 4 months, and as you can see, I only have a select few companies. I own about 8 positions, and I do this intentionally. My intention is to have a concentrated portfolio, and I believe in what Warren Buffett said, comparing diversification to concentration. Diversification definitely waters down your returns, and I believe in what I've learned is that it's better to really understand the companies that you own and actually able to tune into the earnings reports and the investor days that these companies are able to hold, and just being able to truly understand each and every company. And when you look at my company and compare it to the major indices like the Qs, over the past 3 months, I've been able to outperform the major indice by a wide margin. And of course, I'm happy with this. However, my intention as a young investor is to outperform years down the line. I have a really, really long investor horizon. I'm 17. I'm going to be in the market for the next 40, 50, maybe even 60 years. So, as an investor, I have to really look at companies and just see what the growth and time horizon I will be holding each and every one of these companies. And just looking how my portfolio is set up and the distribution, a large share of my portfolio is it's in Micron, around 27%. Yeah, looking at my chart here, 27% of my portfolio is allocated to Micron. And I'm okay with that. Micron has been a big winner for me. I'm up around 100% on Micron. And in the next 3 positions, 14% in UHS, 17% in SoFi. And the reason being is these companies have been big winners for me. And I'm okay with these fantastic companies being such a large position because my investment thesis hasn't changed. I believe a lot of these companies are still fairly valued, especially with Micron. They've been growing incredibly quickly within the memory market. And if Micron becomes a 40% position in my portfolio, I'm okay with that. As long as it stays fairly valued, which it has, it doesn't change how my portfolio intends to be allocated. And since my portfolio is so concentrated, right? I try to hedge my high beta with really diversified companies like UHS and gold. Even though gold is not a company, it's a precious metal. But it helps my diversification. UHS does not move with the market at all. And it truly does help when the market is moving down. You can see UHS is continuing to move up. Just in the past week, you saw a nice move down. However, UHS continue to ride up. And same with gold. That really balances out my high beta portfolio and helps me maintain a strong portfolio. And then looking at my fidelity, this shows my real numbers. And like once again, you can see Micron such a large and strong position within my portfolio. But I think we should take a look at my bottom three, my losers. I've had and owned these bottom three companies for around 4 months, and they've outperformed. I mean, they've underperformed, and that's okay. As a young investor, I've realized just because you buy in at a certain point, you have this thesis, it doesn't mean that the price is just gonna go up immediately. You have to realize it takes time to see your thesis play out. And if you're one of those that just you don't see it go up and you just sell, then you're not truly an investor. You're just gambling. You're just hoping and praying that your position actually turns out to be something. My thesis for my bottom three block, SMC and Okta, they still remain intact. And as long as that thesis remains, I will continue to be a buyer and holder of these two companies. And matter of fact, I'm okay. I'm happy to see them down because that means Wall Street sees a different valuation of a company than I do. I think they're worth far more than what they are right now, and there's a long horizon for these companies to do something amazing. And just looking at the total gain within my portfolio, I'm up around 35% since I've created this portfolio, around $2,000. And to me, that's good. That's definitely good. I like to see this, of course. However, once again, I'm in this for the long term. I'm not gonna get stuck up with short term fluctuations. It's not even been that long since I've created this portfolio. I don't have that much data. So once again, I'm in it for the long run, and I really want to see my portfolio and how I'm able to perform. And I'd like to just look at how the market performed in general in the month of November. So you can see there's been a lot of red in the tech services sector. A lot of red. You see Nvidia down around 15%, AMD around 18%. But if you look at a lot of these smaller companies without big of a weighting, you see a lot of green. I believe the equal weight index this month actually outperformed the indices. It outperformed the S&P. So I definitely think that's something to look at because the weighted indexes have been really just helping out these big players, Google, Microsoft. They've really been carrying the boat while these small market companies have just been chugging along. They've been underperforming. So there's a chance that we see a shift. I highly doubt it. But I'd also like to take a look at health. The health companies have really just been beaten down. And in the past 3 months, I believe health has been the best performing sector. Health has been really amazing. I own UHS as well. And I really do believe these health companies are just they're a really good hedge for people that believe that there is an AI bubble. I personally don't believe that there's an AI bubble. I think AI is going to be a massive innovator and increase in productivity and efficiency, but using these health companies as essentially a hedge to the AI bubble is definitely a good way to position your portfolio if you believe that that fear will possibly kick in. And I think UHS is definitely capitalizing upon that. But I also like to take a look at just looking at Google and NVIDIA. There recently Google and NVIDIA there was a massive talk about the TPUs with NVIDIA and a lot of competition. I really do think this image just kind of depicts it all. Google's trying to take up some of the market share with NVIDIA and the news between Google and Meta with the partnership. And personally, I just think a lot of it's just noise within the market. I don't think that Google's TPUs will have a significant impact on NVIDIA's moat. NVIDIA, it's more than just the GPUs and Blackwell that they create. They have a moat in software. They own this CUDA software that pretty much any AI researcher has to use. If you're doing any form of AI research, AI compute, you're going to be using NVIDIA's CUDA software. So they're more than just the GPUs they create. And then also, Nvidia, the partnership between Google and Meta, it's 2027. It's a partnership that's a couple of years out. And during that time period, you're not just going to see Nvidia sit around. They're going to be developing. They have the new Rubin product coming out. They have a lot to come up in the next couple of years. They're not just going to sit around and just make nothing. They're really going to improve on their products. But and also the market that they're competing in, it's growing so quickly. Even if Google's TPUs takes up some market share, the market share that they're taking is going to be growing. Nvidia's market share, even if it gets smaller, that total share will become bigger as the AR market keeps expanding and keeps expanding. And I just like to take a look at the upcoming 3 weeks before the Santa Claus break for earnings. You have a lot of big tech names. You got Okta, CrowdStrike, with the cybersecurity space, Rubrik, Sentinel. So when you're just looking at the cybersecurity space, you're gonna get a nice look under the hood with these companies. As an owner of Okta, I'm definitely gonna take a look at them, see how they're growing, the total addressable market. They've been a fantastic company, growing quarter over quarter, year over year, and just gonna get a good understanding of them as well. And then also Marvell. Marvell, pretty much a pick and shovel play within the AI industry. They're pretty much helping with the AI data center build out. So it's gonna be nice to see a good look under the hood. They they I wouldn't say they've been outperforming the market initially. So it'll just be nice to see how they're able to show their profitability within the AI space. And then also Salesforce. Salesforce is definitely going to be a good company to look at. They've been really beaten down. They've been a really talked about and beaten down company within the market. And Salesforce is pretty, I wouldn't say they're undervalued, but they definitely been overlooked for sure. They've consistently increased their free cash flow per share quarter over quarter, year over year. They do buybacks, so they'll definitely be a good company to look at. And I do think there's opportunity here within Salesforce. And looking at the following week, you have Adobe. Adobe's a lot like Salesforce, and it's just been a really beaten down stock over the past couple of years, in the past 5 years. And I really like to make the comparison with Google and Adobe, because within the past couple of months, sentiment within Google has changed significantly. But before that, people were saying that Google is going to get replaced by ChatGPT. No one was going to use Google anymore. And now people are saying that we're not going to need ChatGPT because we have Google and Gemini. So you can just see how quickly sentiment has changed. And then it's the same thing with Adobe. People are talking about Canva and Figma and all the competition within Adobe space. But you got to look at the fundamentals within the company. Nothing has changed. Nothing within Adobe, within the fundamentals, has really changed for the company. They're consistently growing the revenue each year, each quarter, and their EPS is amazing. This is a good company with a lot of potential. So it's definitely worth looking at their earnings report in the following weeks. And then also we have Costco and Lululemon. I truly do believe that these two companies are a nice indicator of just how consumer sentiment is in society. Because if you're paycheck to paycheck, you're not gonna go out and buy Lululemon's $100 joggers. You're gonna go to Costco and buy their $10 Lululemon replica. So that's just gonna be something to look out for. They're definitely a good indicator of how the consumer is performing within their economy. And then looking at Broadcom, a lot like Marvell, definitely a picks and shovels plays within the AI data center build out and just the AI industry in general. Massive company, $2 trillion market cap. So gonna be something to look at for sure. And then also Oracle on the Friday, the next couple of weeks. Oracle, if you don't know, Oracle has a lot of debt. They've really been trying to leverage debt to do this AI build out. And I really think it's going to be something to look at and look forward to see how they're leveraging this debt and the capex to truly build out. Because how about see Oracle? If anything goes wrong, the debt's really going to punish them within the market. But truly, I don't think they're going to have any issue. I think leveraging debt is definitely a risk worth taking within this massive AI data center build out. And one thing to mention with GameStop, kind of under the radar, of course, one thing to mention with GameStop is the price of Bitcoin. So GameStop owns a significant amount of Bitcoin. So if there's a loss within Bitcoin over the past couple of months, you get to see that's going to affect their EPS. So I'm curious to see how that comes up in their earnings and if Wall Street looks at that significantly and causes a drop in the stock price. So that's definitely going to be something to look out for at GameStop. And then the last week before the Santa Claus rally, you have my company, 27% of my portfolio. You have Micron. Micron's, of course, I'm going to tune into the earnings call. It's going to be anticipated for me, of course. And then when I'm looking at this, I really just want to see an end in the cyclicality of just memory stocks in general. My thesis with memory and Micron is that there's not going to be a cyclicality of these stocks. Because what the company has been priced at with its PE is that memory has been cyclical. And I just think with this massive AI build out, that cyclicality is going to end and the increased productivity and efficiency is going to be very key for Micron in general. And just looking at that increased productivity, there was a very interesting clip that I saw by CNBC. We're going to take a look here. They're saying that AI can already replace around 12% of the US workforce, which I think is insane. Let's take a look here.
Of AI not working out, now MIT has built agent clones of 151 million working Americans, essentially software counterparts to real people, in order to identify which jobs are most at risk years before layoffs hit. Now, it's called the Iceberg Index.
So essentially, MIT has done a study where they just simulated 151 million workers, and they were able to see what jobs and what was actually at risk. And they essentially found that there's a potential $1.2 trillion job shock. And being 17, that's very scary to me. I'm about to graduate soon, so knowing that there's going to be a potential massive amount of job losses that can occur, that's definitely scary. But it's also reassuring to me of why I study these equity markets. I study equity markets because I know that there's a shift in what value is and how you should look at value in and of itself. I understand that when you see something like this, there's opportunity. As an investor, we have to look and see where opportunity is and how can you profit from it. That's what every good and best investor does. They look around and see where's the opportunity in this. And I'm gonna end it off there. I've linked my portfolio on Savvy Trader in the description. And if you want to keep up with my portfolio journey at 17, I'm gonna be here making videos. If you want to see my portfolio, if I can outperform the market or if I crash and burn, hit that like and subscribe button.